What's going on, everyone? Michael Album here from Roofstock Academy. And I want to talk to everybody today about how to actually calculate your property taxes. So anyone who's purchased real estate might know that calculating property taxes, nailing them down, what they're actually going to be, can be really difficult because they're not always going to stay the same from when you purchase the property. Now you own it, they could absolutely change. So here are a couple things that I always recommend to do in order to really nail down into your pro forma what your property taxes are going to be. So first and foremost, number one thing you should do is call the county assessor. Make sure that you actually pick up the phone. I know it's kind of crazy in today's modern tech world, but pick up the phone and call the county assessor of whatever county the property you're interested is in. So if I'm interested in a property in Riverside County in California, I'll pick up the phone, call the county assessor, and just ask to speak to someone who can tell you about how property taxes are calculated. Because the interesting thing is that they vary from county to county, even within the same state. So we could be in California. California has a statewide law that says the property tax is no less than 1% of the property's purchase price. Now, Riverside County might do a little bit different than Yolo County or Alameda County. And so you want to understand what those differences are. So figure out where it is you're interested in property, pick up the phone, call the county assessor. Now, they're probably going to throw a bunch of different terms at you. They might say assessed value, appraised value, market value, purchase value. All these numbers can be different, and they could also be used differently. And so not only do you want to talk to someone who can walk you through how to calculate the property taxes and what values they're using, but actually have them walk you through how to do the math, because it can be really overwhelming very quickly. Something to keep in mind is that there are three values that tend to be totally independent of one another. One can be the assessed value. That's what the county is using to determine property taxes. Your second is your purchase price. That's whatever the fair market determines your property is worth, or you determine it's worth because you bought it for that. And the third one is usually from the insurance company. That's the replacement value. And so these are three values that might never ever align. That's okay. So don't worry that the county is assessing your property way lower than you paid for it. That doesn't mean it's worth less than you paid for it. And same thing with the insurance company. If they tell you, hey, this is the assessed value or the replacement value of your home, and you're like, wait a minute, that's $100 grand less than I paid for it. Again, don't freak out. You want to understand what number the insurance company is using on a rebuild cost per square foot to get to that number and make sure you're not underinsured. But it's not a big deal if the property value, the assessed value, what you paid for it, are totally different. That's often very normal. So again, getting back to talking with the county assessor, talk to them and actually have them walk you through. Say, hey, if I bought this property on 123 Main Street for $150,000, how do I calculate my after-sale property taxes as an investor? Because something else that's really important to keep in mind is that there are often different tax rates for investors versus owner-occupants or homesteaders. And so you want to be very, very, very clear with the person you're speaking to that this is a pure investment. Because if they understand or misunderstand you that this is a owner-occupant rate, they could give you a lower rate. You calculate it and you're like, awesome, I'm in business. And then it turns out your tax rate's actually going to be double what you calculated going into it. So again, you want to be very, very clear with the person you're speaking to that this is an investment. Hopefully they're able to walk you through exactly how to calculate your property taxes. But again, it's going to be different in every county you go through in the country, even within the same state. So don't make the mistake of thinking, oh, I spoke to this county in Georgia and now I'm good for the entire state. No, if you decide not to purchase in that particular county, you want to call a county that the property you're interested is located in to determine exactly how you calculate property taxes. Some counties will just do a new assessment whenever there's a sale and say, okay, this is our millage rate. That's usually a multiplier that they're using to calculate property taxes times some value, whether it's the purchase price or some assessed value that a county assessor determines the property is worth, times the millage rate. That's your property tax for the year. It might be that simple. They might tell you something like, oh, we actually do a reassessment every 5 years or 2 years at some sort of regular frequency independent of a sale. And if that's the case, you want to understand what that future property tax rate or value is, but know that until they do their reassessment, you're going to be paying whatever the previous year's taxes were. Now, that's a very common case in a lot of places in the Midwest. So again, just really understand, get a high level but also very specific understanding of how to calculate property taxes. And I would say you should be able to explain it to someone else. because that's how we in the education world find the best way to learn is actually to teach it to someone else. So if you can explain it to a spouse, a coworker, a friend, a partner, how the property taxes are calculated for that particular property and what your projected tax rate and tax amount is going to be, then I'd say you're in good shape to move forward. But until you can do that, I would say keep having those conversations. As awkward as it is, ask them to walk you through how to do it. So those were a couple tips I have for everyone on calculating property taxes. And it's super, super important. It's often one of the biggest expenses associated with a property. And so you really want to get it right, because getting it wrong could mean the difference between a home run of a property and a potential alligator that's dragging you down with it. So I hope you enjoyed this video. Feel free to leave us a comment down below. We love hearing from you all. And as always, see you on the next one. Happy investing.